Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, March 19th, 2009. Well, we're seeing a slight bit of a pullback on Wall Street today, and there's some key patterns I really want to go over in the intraday charts to give you guys an idea about the trendline analysis, price pattern, and timing we use to analyze this market and give out our guidance. Now, the key is here, guys. You knew the market was obviously extended. Yesterday's Fed decision just rocketed the markets up right after the decision. We had a hard pullback afterwards, and you can see that on your intraday chart here. Here's where the Fed came out, all the way rallied up to a key resistance, and those in the daily and nightly videos that we put out to our premium subscribers obviously knew about this resistance well ahead of things, but it went right there to the penny almost, pulled back hard to a $79 support level, and then rallied up a little bit into the close. The 60-minute I'll show you as best I can some key levels on that to know when that $80 level was hit yesterday and how you knew it was going to go there. But the long story short is this. You opened the market this morning on a little bit of a gap up. The market just really was a good fade the open type move. As soon as the market opened, you could have short this market. And again, the rally that we've seen lately has been ginormous. You're literally talking about 20% off the lows type of move in just about a week and a half. And anyone with common sense has to realize that the market needs to at least come in and consolidate and pull back a little bit. Even maybe a 0.25 retrace or a 0.318 retrace, something like that. Something in that regard, Fibonacci levels and down to supports. Now, what you're seeing here currently is a key pattern that could be a bearish flag pattern. However, I have this key line that I had in yesterday's video. You have to watch, all right, guys? So key, and I showed you this yesterday, and I continue to have it on my chart because we still have not broken this to the downside. If this line and this pink trend line comes to fruition, meaning it breaks to the downside, you should see the 200 moving average on the intraday tagged. All right, and keep watching for that very closely. Now, what you're seeing here intraday is obviously we started to sell off from the gap up. You came down to the 20 moving average. Really, you came down to this support line yesterday on the pullback. You rallied off the 20 up a little bit and then started to sell. And this is obviously, for those of you that know your price pattern and timing, you have to note that the 1030 low was put in here for the bounce, which gave you, again, 10 o'clock, 10:30 are key timing parts of the market. Again, we focus on that price pattern and time, and this here you want to use time. At 10:30, you pulled back into 10:30. At 10:30, you got the bounce back up. Now, what you look for now is a bearish flag pattern, in spirit of bear flag pattern off that move down, and you can see that beautifully coming into view here. You can see retracing back up, following the 20 beautifully. This is a non-stop bearish pattern. You have to look for the short off of this. As soon as it breaks that 20, that short can be taken. And look at what happens once it breaks the 20 moving average. Again, breaking the 20 and then the slam down all the way down to the 50 moving average. Now, you're really trending right above this pink trend line, and I want to show you where I got that from. Scan all the way back. Keep going back, all the way to, and we'll go right to it, to the 10th of March. So you're really going back over a week ago, basically a week and a half ago, to get that line. And what you do there is you take that 10th low and you extend it to the low on the 12th right here, and then continue to extend it, and it comes into play again on the 17th, multiple times, and then all the way into view over the last couple days on the 18th, and then we're nearing it now. And you can see this. This is a bearish pattern. We just talked about this bearish pattern. Now you're starting to see the fall. The only thing here is, folks, is you have a major support line right here. This line has to break. Until this breaks, I would not think that the market necessarily will take a rocket ship down. However, you get a close below that in confirmation. Watch for downside. Again, just notice the pattern here, guys. This is all we talk about. This is what we teach. This is where our guidance comes from. Knowing your pattern recognitions, knowing this is a bear flag pattern and then a flush, knowing this is another bear flag pattern right into the 20 resistance. You have resistance right here, and then a flush to the downside. Again, note that the support line has to be played here as major support, though, at this level. Currently, I have that level at approximately 78.80 here on the charts. And we basically just came down to it and then bounced again. We're bouncing a little bit. But what you want to look for now is just to see if we break. If this does not break, you could see a move back to the upside later today. However, at some point, I do believe this line will break. And when it does, you should get a pretty decent flush to the downside. A couple key levels you should watch if it does break are these lines that I'm going to currently draw in now. All right, this one right here at approximately 78.25. And then if you break that, you'll have a little bit of minor support coming here at 77.85, and then ultimately there'll be a very good amount of support right down here, and let me punch that in. All right, somewhere right in this area approximately 77.25. And obviously, you're going to watch for the 200. The 200 sloping up. I currently have the 200 around $77. But remember, every 10-minute period, that will move up. All right, so it may intersect this secondary low here of support at 77.25, and then go higher. But really, what you're watching for now, folks, all I want you to be focusing on in this intraday video is this trend line. Do we break it? Do we hold it? If we hold it, watch for a possible move back above the 50 moving average, and even a possible recapture of the 20 as it slopes lower. All right. Again, what you're going to look for is a close below and then confirmation, and we should see continued downside. Now, on the charts, you obviously want to look at your key levels, and we talk about this a lot in the nightly videos to our elite subscribers. And again, that is the high of the day. And this is how you have to know you're going to be meeting resistance. Your gap up today went right to the high of yesterday. And you have to know that as a trader or as an investor when you're using the daily charts, the weekly charts, the intraday 60, the 10-minute. It doesn't really matter. If you get a double top like this day after day, you're going to know there's going to be resistance. That's probably a good shorting opportunity, and it sure did turn out to be that way for the dump all the way down into the 20 moving average. Now, on your lower side, you figured you'd come into some support right around here. See this pivot low right here before we bounced and made the bear flag and before the previous fall down to the 50 here? That's what you have to realize. First of all, you know you're coming into some support right down in this range because this is where we pivoted before that little upturn into the close. In addition, you always want to take your pivot low before your move up intraday and just extend it throughout the daily charts. Let's do that and see why that's important. And there you have it, folks. See this pivot up into the 20 also coincides with this trend line that I just drew in, giving us a good signal that markets should be pulling back as it pierces both of these levels right here, and that's exactly what the market did. So keep an eye on that, folks. Notice the little bounce you're getting right off this pink big support line. And again, we just talked about how there should be support here, and a possible little bounce could be coming in. That is exactly what the market's doing. We'll see if it reverses, though, and takes that lower line out. That'll be something to watch. All right? On this chart, the other thing I want to draw in, your low of the day should always be in as possible double bottom intraday support. That's this green line I just drew in, and I took the low from 78.72 and drew that in. And look at this little bounce you're getting, guys. Again, a good example of how well our techniques and price pattern timing and technical trendline analysis works. Okay, a couple things I just want to go over quickly on the 60-minute, and then I want to just touch on one other thing, and I think I'm going to touch on that other thing first. A reminder to everyone out there that if you're interested in really getting a great handle and learning how to do this stuff and being in an intensive course for about a 5-hour period, this Saturday, March 21st at 1 p.m. to 6 p.m. Eastern Time, we're doing our Elite Series webinar. All right, this is where we teach our proprietary indicators, stuff we don't even go over in our videos. And if you're really interested in getting a hardcore grasp on what we're doing and how to do it and to be able to do it for yourself, that's what you need to sign up for. You can go to our website, inthemoneystocks.com, and sign up for it on there under Education, Seminars, and Webinars link. Now, the 60-minute chart, let's just quickly touch on this before the end of this video today, folks. What you could be putting in here after that gap up this morning and pullback is a bearish 60-minute pattern. So watch for this. If this comes to fruition, you're going to get a dump down to the 20 moving average. And notice how this one trend line, and I've had this trend line in for days now, days from this point here to this point all the way across, this trend line is going to coincide with the 20 moving average in about an hour or two. So if we do dump out, there'll be a lot of support right around this $78 level, $78.25 level range. A lot of support. So really watch that if this bear flag does decide to dump to the downside. All right, and it does look like it is forming right now. It could be negated later by a different pattern, but for now it does look intact, and that's what I would be looking for. Near term, look at this market, guys, on the 60-minute. From the lows on the 6th of March all the way up here to the highs this morning, major uptrend. Look for consolidation and pullback to continue just for a healthy market. All right, guys, have a wonderful day. We'll talk to you all tomorrow. Take care.